Okay, so we are discussing accounting for banking companies. I think we have covered concept number 1, if I am not wrong. If you remember, we have totally 6 concepts. Concept number 1, rebate on bill discounted. Concept number 2, secured loan versus unsecured loans. Concept number 3, why are you singing song? RBI prudential norms, classification of assets and provisions. Hi Banu, how are you? Concept number 4, concept number 4, RBI prudential norms, income recognition. Concept number 5, DICGC and ECGC. Concept, good evening. Concept number 6, section number 17. Out of those 6, we are discussing concept number 1, that is nothing but rebate on bill discounted. So for this we need some knowledge in your group 1 financial accounting, where you are little bit unexpected, nothing but bills of exchange. So on that bills of exchange, you have to at least aware of calculation of due dates. I think, do you know, I think how to find out due dates? We have to add 4 grace days. 3 only, no? 3 grace days. For example, if you observe these 4 bills, so first bill date 1/1/2024, 3 months means 4/4. So generally 1/4 only plus 3, no? 4/4. Second bill 15/4 plus 4 days, 18/8. Third bill 11/11, 3 months, 14 Feb. Last one 12/6, 2 months, 14 August. Yeah. Then you know, whenever bill is discounted, what is entry for a bill discounted in your bills of exchange? Bank account debit, discount account debit to bills. But that is in your group 1 only. In group 2, we have to think about in banking point of view, not in drawer or drawee point of view. So we have to think in banker point of view. Already we discussed what is the journal entry in this case. What is entry? Bill discounted account debit to customer current account to interest and discount account. Correct, no? Yeah. After that, we started with rebate on bill discounted. Actually, we started with an example. If you remember, so bill amount is 1 lakh. We discounted with 90,000. So what is entry in the books of banker? Bill discounted 1 lakh rupees to customer current account 90,000, to interest and discount account 10,000. But here what is the problem? Date of bill is 1/1/2025, but term of bill is 5 months. That means what is the due date? 5 months means it is around 1/6/25 plus 3, 4/6/25. So what the problem is, so out of this entire 5 months, 3 months in current year, 2 months in next year. But you recorded entire 10,000 in current year income. That is not correct. As per section number 128, your books of accounts always shows true and fair view. So to show true and fair view, recording 10,000 is not at all appropriate, not at all correct. So definitely we have to remove some amount from this 10,000. Of course, out of 10,000, some amount is relevant to the current year, some amount is relevant to the next year. Just for example sake, out of 10,000, 6,000 is current year, 4,000 is for next year. This 6,000 is called current year interest, or you can call it as a expired interest. Expired interest means current year interest. Hey Mahesh, how are you? Remaining 4,000 is called next year interest or unexpired interest. For unexpired interest, we have to create rebate on bill discounted. So what is entry for it? interest and discount account debit to rebate on bill discounted, that entry should be on balance sheet date. On next day we have to reverse the entry, that is nothing but interest rebate on bill discount account debit to interest and discount account. All these are get cancelled. This is an adjustment entry, nothing more than that. After that we have started with one beautiful and cute and smart problem, question number 1. I think this is the question, correct? So we have find out all interest rebate on bill discount for all the 4 bills. First of all, just I will recap how to find out rebate on bill discounted. Tell me, whenever question comes from this area, what we should do? Tell me step by step. Step number 1, we have to find out due date. Just answer orally and along with calci, don't without using pen and paper. What is the date of bill? What is the period? Then tell me due date. 5, 5, 10, 5 more months. 11, 12, 1, 2, 3. That means 18, 3, 22. That is first step. Second step, we have to find out gap between balance sheet date and due date is 18th March 22. Correct, no? Find out the gap. December is already completed. Next, January 31 days, Feb 28, March 18, total 70. That is step number 2. Step number 3, bill amount 50,000 into 8% into 77 by 365. That's it. In the same manner. Yeah. Answer done. Huh? In your notebook, please give me. What is the total? Okay. So for the first one 844, second bill, where it is 414, for third bill 667, for fourth bill. Then what is this nonsense? Okay. Then write down, therefore total rebate on bill discount sorry, I forgot. First of all, had your delicious lunch? Yeah, that is important for us. All this accounting audit is secondary. What about me? Yeah, always on fasting. How do you know? Okay. We are on live. We can't say anything. Yeah. Total rebate on bill discounted. Tell me, what is the first bill discount? 844 plus, who is that sweet voice person? 414. After so much of gap, I felt my voice is so good. 414 plus 660. Thank you, ma. Even I got full confidence on my voice. Now I can go for singing. Last one. 1213. 3138. This is the total rebate on bill discount. So you know entry, we have to record entry for it. No. What is the balance sheet date? 21, right? What is entry for rebate on bill discount now? Interest and discount account debit to rebate on bill discounted. How much? 3138. That's it. Answer done. Next day what happened? We have to reverse, but not required. Who is R Vamsi? Okay. Tanu mi sister andi. She is so active. CBN, good evening. Completed now? So with this, we successfully completed concept number 1. I think all of you are perfect with concept number 1. If examiner picks question from this concept number 1, every one of you should answer it 100% accuracy. So they can ask only this kind of question. Maximum what they can do, they can just change the numbers, change the interest rates, nothing more than that. Or if you want to twist the question, he may include leap year in that. Generally, majority students will ignore that point. We have to buy 366 instead of 365 if they have given leap year. Okay, otherwise 365 only. That is the maximum level they can twist the question. So that means our first concept is completed. If you have any queries, you can raise right now. Otherwise, I will move on to the next topic. Can I move on? Yeah, or the second topic, secured loan versus unsecured loans. Concept 2, secured loan versus unsecured loans. Yeah. What are you writing? You're writing something which is personal. No. You're sitting like on park bench. Fine. So, concept number 2. Concept number 2, secured loan versus unsecured loan. Use your common sense if you have. See, don't, no problem, I will help you out. So, generally, bankers will give secured loans only. They will not give unsecured loans. For example, if you need some amount of 50 lakhs right now, no banker will give you 50 lakhs without any kind of security. If you give your house or else if your assets as a security, you will get that amount of 50 lakhs. Subject to condition, your assets value more than 50 lakhs. Otherwise, you will not get that 50 lakhs. Correct, no? Yeah. But generally what people will think, unsecured loans means loans without any security. That is correct only for definition sake. Secured loans means loans given to customer based on security. Unsecured loans means without security. But here what happened, 99.9999% of the banks, they will give loans of only secured loans. They will not give unsecured loans because that is high risky. Correct, no? So nobody or no banker will give you unsecured loans. If you need any kind of loan, you have to give some amount or some asset as a security. For our academic purpose, please remember one point, there is no unsecured loans. Always I will discuss only about secured loans. Even just for academic purpose. But in practicality, there are some personal loans are there. They will give you without security. Okay? They will give you based upon your pay slip or your salary or your bank balance or your status. But in academic purpose, there is only secured loans are there. There are no kind of unsecured loans. Now I will give you one example. That example is enough for this concept. For example, some SBI bank is there. They have given loan on 1/4/23. Loan amount is 50 lakhs. Obviously, that loan is secured loan only. Secured asset is this house. So now think in banker point of view, not in customer point of view. Now you are the banker, I am the customer. So I approached you for a loan, you have granted me loan. So what is my security? Security is my house. Please tell me right now what could be the value of that house. It should be more than 50 lakhs. Otherwise you will not give me loan of 50 lakhs. It's common sense, no? Yeah. So what is the date of loan? 1/4/23. At the year end, nothing but on 31st March 24, what happened? This house value suddenly fall down to 30 lakhs. There are some chances are there, no? For example, like flood areas in Chennai or else Hyderabad. In such cases, definitely value of those assets will get decreased. At the time of taking of loan, this house value is 70 lakhs. But at the end of year, what happened? It is reduced to 30 lakhs. Now think in banker point of view, you are a banker, you have given loan to customer with a security or with a notion that my security is there, that is 70 lakhs. But what happened? As on balance sheet date, as on 31st March 2024, as on your closing of your books, that asset value is not 70 lakh, that is only 30 lakhs. You have to apply your prudence concept. You have to revalue your security asset. At every year end, you have to revalue your asset which is secured. So what is the real life value? This is only 30 lakh. For example, in this example, the value of house as on this date is 48 lakhs only. What is the loan amount? For example, interest rate 10%. Year end, what happened? You have to pay principal amount 50 lakh plus interest 10%. Total you have to pay 55 lakhs. But what is security of your customer? 40 lakhs, 48 lakhs. If a customer is unable to pay, we will acquire that asset. We will sell that asset in open market. We will get only 48 lakh. Out of this 55 lakh, we will receive only 48 lakh. Of course, customer will pay. That is no problem. But you have to revalue your assets at each and every balance sheet date. If he is a good customer, no need of security as well. He will pay on time. But what Banking Act says, you have to revalue your assets, whatever security are there, you have to revalue at each and every balance sheet date. We have given loan on 1/4/23, loan amount is 50 lakh. They have given their house as a security. On the date of loan, definitely this value of house is more than 50. It is around 70 or 80 lakhs. No problem at all. What happened? On balance sheet date, while I am revaluing, I found that the value is only 48 lakhs. This is realizable value of house. What is the receivable amount from customer? Principal amount 50 lakh plus interest 10%. I have to receive 55 lakh. Out of that, if anything goes wrong, I will receive only 48 lakh. 7 lakh is called, I will not recover or receive 7 lakh. So what Banking Act says? Banking Act says this 48 lakh treated as a secured loan. This 7 lakh is treated as a unsecured loan. But normally what people think unsecured loans means loans without security. But here security is there, still we are calling it as a unsecured loan. Are you getting my intention? So even though we have given our assets, that means client has given his house as a security. Out of this security, out of this loan, some amount of value is called secured loan. Some amount of value is called unsecured loan. Please listen one more time. So loan amount is 50 lakh, interest rate 10%, security is house. What happened on balance sheet date? House value is reduced to 48 lakhs. So think you are a banker. How much receivable from customer? 50 lakh principal amount, 10 lakh interest. Total how much receivable? 50. Out of 55 lakh, how much you can recover from that house? Balance is 48 lakh is called secured loan. 7 lakh is called unsecured loan. For example, SBI has given loan to you, correct? No? Tell me, in SBI point of view, is it liability or asset? In SBI point of view, SBI has given loan to you. Is it asset or liability? Asset only. For you, that is loan liability. So that is the reason I should not call it as a secured loan. Why? Because loan means liability. I have to call it as a secured advance. Advance means I have given to customer. Unsecured loan, you have to call it as a unsecured advance. They have given loan only. If you call it as a loan, it will be looks like liability. That is the reason we have to call it as a advance. I hope you got my concept. So this example is enough. Okay, na? So I will give you one more example. ICICI Bank is there. They have given loan to Reliance Industries Limited. Loan amount is 100 lakhs, nothing but 1 CR. Or for simplicity, let's take small amount. 10 lakh rupees is the loan amount. Security is their shares. Shares of Reliance company is the security. Reliance company has given 1 lakh shares of Reliance company. At the time of taking loan, the share value, each and every share value of Reliance company is 20 rupees. That means 20 lakh is the secured portion value at the time of taking loan. For example, date of loan is 1/4/25. On balance sheet date, for example, 10% interest. On balance sheet date, what happened? Nothing but 31st March 26, share value suddenly fall down to 8 rupees. Each share value from 20, it is fall down to 8 rupees. Now tell me, how much banker has to receive? What is the loan amount? 10 lakh plus interest 10%. That means we have to receive 11 lakh. Out of 11 lakh, what is the security? 1 lakh shares into right now price is 8 lakh rupees. Out of 11 lakh, we can receive only 8 lakh. 3 lakh is unrecoverable. So this 8 lakh is called secured advances. This 3 lakh is called unsecured. That's it. This is the concept. Sometimes they will give you a question like, one question is there, we will do it directly. That is more than enough. First of all, do you understood this concept? What is the concept name? Secured loan versus. But the correct term, if you follow the concept, what is the concept number 2? Secured advances versus unsecured advances. Why I am not calling it as a loan? For a banker, that is not a loan. They are giving loans. They are asset. That is asset for the banker. For customer, that is loan. Just for the understanding purpose, I have given as a loan. So in concept number 2, the question will be like this. They will give you some date of loan and loan amount. They will give you some security. At the balance sheet date, they will give you the revalued figure. So you have to tell us how much secured, how much unsecured. Same question is there in our material, but small change is there. After that, I will show you a beautiful concept. So I think you don't have material right now. So very soon you will get it. Where it is? Question number. Yes. Look at the screen, all of you. You have to observe carefully. Very easy question, but a small technique is there. The books of a bank includes a loan of 5 lakh rupees advanced. Advanced means they have given loan. Advanced on 31st December 2020. That means one bank is there. They have given loan to some customer on 31st December 2020. Loan amount is 5 lakh rupees. Interest chargeable at the rate of 16% per annum. Per annum means entire year interest is 16%. Compounded quarterly. These two words are very, very dangerous. They are compounding it quarterly. I think you know what is simple interest, what is compound interest in your childhood in 5th or 6th class. I think you are aware of those all. PTR by 100. Yeah, thank God. The security of for the loan is being 7,000 shares. Here also they have given their shares as a security, 100 each in a public limited company, valued 90 each. So as of now, what is the share value? 90 rupees. How many number of shares are given? 7,000 into 90. Say 6,30,000. What is the loan amount? Obviously, our secured value should be more than our loan amount. Otherwise, banker will not give you loan. Here, tell me what you understood. What is the loan amount? What is the date of loan? What is the secured asset? Shares. How many shares? What is the value per share? 90. But the problem is they are charging interest compounded quarterly. First of all, do you know quarter? Quarter means how many months? 3 months, 4 months. 3 months, 4 months. Wait. 3 months, 4 months. 4 months. 3 months. 4 only. Kirti ma'am. 5 months. 7. Oh, 7. Matta Mahesh. 3 months. 34. Oh, 34. So, Janu, quarter means 3 months only. For entire quarter, for entire year, I'm disturbing. Even I don't know all those things, but still okay. Promise on you. Okay, we are on live. So per year, 4 quarters. For each quarter, 3 months. Okay, no? Yeah. There is no repayment till 31st March 22. This is very, very important. On 31st March 22, the value of shares declined to 80 per share. How would you classify this loan as secured and unsecured? Okay. Listen very, very carefully. I will do it. Just focus. You don't write question numbers. Just I'm changing all question numbers as well. Yeah, what is the date of loan? 31st December 2020. What is this in between? Pay more attention. I will show you question paper at the end of this chapter. For the last 5 attempts, you will be surprised. 31st December 2020. Next one, loan amount. How much? 5 lakh. Next one, interest. Yeah, this is very, very dangerous, man. Listen. Interest is 16% per annum. But they are compounding quarterly. Yeah. Secured asset equals to 7,000 shares. So, failure up to 31st March 22. Listen very, very carefully, all of you. What is date of loan? 31st December 20. They are compounding quarterly, no? Per quarter, 3 months. Tell me what is next quarter after the date of loan? 3 months. Jan, Feb, March. That means the first quarter ending would be 31st March 20. Just I am checking your presence. Not covered. So what is the loan amount? 5 lakh. Compound and quarterly means we have to just add. What is the interest? 16% per annum. But we need per quarter. Per year 4 quarters, no? That means 16% by 4. That means it will be plus 4%. You don't do anything, just listen. Focus. I will give you questions as well to answer on it on your own. Next quarter means add 3 more months. 30, 12. June 20. Again plus 4%. Next quarter means 30 or 31. 39, 20. Again plus 4%. Next quarter 31, 12 plus 4%. Next quarter failed up to 31st March, no? That quarter is also there. 31st March 20. This is the last installment where they have failed. Plus 4%. This is outstanding balance. Open you. Someone give me calci. I will do it. Otherwise, it will take so much of time. 5 lakh plus 4% plus 4% plus 4% plus 4%. 5. How much? 6. 6 lakh 326. This much amount payable by the client to the banker. Think in banker point of view, we have to receive 6,08,326 from a client or a customer. But on balance sheet, we have to check a revalued amount. So what is the revalued amount of shares? Realizable amount, I can say. Realizable amount equals to 7,000 shares into share value is declined to 80 rupees. 7,000 into 80, say 5,60,000. So total outstanding advance. How much outstanding advance? 6,08,320 minus how much secured? 5,60,000. The balance would be unsecured advance. That's it, done. You have to say secured, unsecured, 7 marks. But this is the calculation part. This is enough. Nothing more than that. Some other faculties will say in different manner, not required. This is more than enough. If the examiner asks compounded half yearly, how to do? We have to take 6 months instead of 3 months. 16 in 4% plus 8%. Yeah, listen one more time. They have given some loan to some customer amount of 5 lakh. Date of loan 31st December 2020. Interest rate 16% per annum. They are compounding quarterly. Secured asset is 7,000 shares. At the time of loan, value is 90. That is irrelevant for me. So when we are doing all these things, we are doing all this on 31st March 22. Now the value is decreased to 80 per share. They are compounded quarterly, no? So date of loan 31st December 2020. So I have to compound till 31st March 22. So plus 4%, plus 4, plus 4, plus 4, plus 4. This is called compounding, interest on interest. Total amount would be 608,326. This much amount receivable from the customer. But we have some security is there, no? What is the security? 7,000, but right now its value is only 80 rupees. That means the value is only 5,60,000. Out of 608,326, this 560 is called secured advances. The balance 48,326 is called unsecured. That's it. The same question has been asked in one of the exam. I will show you at the end of chapter. Otherwise, it will be something like missing. Copy. Question numbers, leave the space for question numbers. Why? Because I am changing the order. తీసుకెళ్ళిపోతానమ్మా నువ్వు కొడతాను don't write question number, leave the space for question number and write the answer. Geetanjali, done. Where is Shraddhanjali? Where is Kavya ji? Angita, where is Jyoti? Yeah. Karnakar, Sudhakar, Vesurup, ఎవరి కింద better example is needed, no? Ayyo, OMG. 1, 2, 3, 7 days more. Yeah. Please wait for 1 week. I will tell whatever you want. Where is the example? Yeah, first of all, write down concept number 2. Yeah, that's it. Concept number 2. Secured loan versus unsecured loan. Aki, completed. Mahesh M. Where is Katapa? Okay, you're acting nicely. She is somewhere else. Got it. Can I scroll? Why so? Dilip completed. Draw that pic as well. Yeah, that is my dream house. Okay, okay. Please focus and pick. Chichi, concept, not on pick. Kavya garu, come. Make it fast. This weekend syllabus of our subject is accounting for banking companies. Total chapter. From this week onwards, they will conduct weekend examinations. Even then, they will evaluate the purpose and same thing will be forwarded to your parents. Are you really drawing that picture? I think so. Otherwise, that is just for 1 minute concept. You are writing out from last 5 minutes. Yeah, make it fast. Geetanjali completed. Make it fast. What about my dear backbench heroes? Doubt? No? Okay. That's how people are. Out of this entire content, everything is correct. There is small spelling mistake. They are focusing on this a small spelling mistake. Where it is? Yeah, that's how people are. Kirti. Yeah. What happened? Real Kirti is there. Huh? Okay. I have seen you somewhere else. Are you from Birla batch? Huh? All batches. Huh? I think I have seen in yesterday's class. Yeah, 10 no? Don't try to decode all these things. That is a little bit difficulty. Yeah. Yeah. Don't decode. Chandrasekhar, Dilip. Yeah, question number, give space for question number and copy it. Mahesh, come on. When will be your holidays? Do you know there are holidays for you? We are planning holidays. Yeah. No, no. On each and every Sunday afternoon. Yeah. On each and every Sunday you can take rest. Because there will be no more classes on Sundays. You are genius, man. For the first time in the history, you are writing the answer without knowing question number. Correct, no? Yeah. For some people, question number is irrelevant. Question is irrelevant. Like you. Yeah. Mm. Realizable value. Completed, huh? What is your name? Nishita. Correct, huh? N starts with. Make it fast. Completed, Andy. Secured advance, how much? 5,60,000. Unsecured advance, 48,326. So with this, our concept number 2 is also completed. What is concept number 2? Secured advances versus unsecured advances. Please try to understand why I am calling it as an advance instead of loan. What is the reason behind it? So for banker, that is asset. If you call it as a loan, that will become liability. That is not at all correct. We have to call it as a advance. The problem will be exactly like this. They will give you loan amount and some date is there. Some security will be there. In future, that will be reduced. The only thing you have to find out what is outstanding balance. In this problem, how we found out outstanding balance? Because they have given compounded interest, I have to add plus 4, plus 4, plus 4, plus 4. By the way, how we got this 4%? Per annum 16%, per quarter 16 by 4, 4%. Why I wrote by 4? Because per year there are 4 quarters. For example, if nothing is there, they have given nothing about compounding quarterly, then what is the answer? We have to just take interest rate. Date of loan is 31st December 20, current year is 20. That means in between, how you have to find out the gap. That means how much gap? 31st December 21 and 31st December 22 plus 3 months. Correct, no? That means 2 year 3 months. Sorry, 31st March 22. So first year ending 31st December 21, second year 31st March 22. 1 year 3 months. Directly apply like 5 lakh into, what is the percentage? 16% into how many months? How many months? 15 months. How to apply it then? 1.3, no? That means 1 year 3 months. 3 months means you can convert into years, like 3 by 12, 1 by 4, nothing but you have to write 1.25 years. That is also fine, you will get the answer. So based on question, you have to apply this calculation. So you will get some outstanding balance. In our question, the balance is 6,08,326. Then what happened? Some security is there, 7,000 shares. Present market value is 80. Nothing but 5,60,000 is realizable value. How much outstanding? 6,08,326. Out of this, how much secured? 5,60,000. Balance 4,8326 is called unsecured. That's it. Okay, Nandi. So let's move on to next concept, concept number 3. What is concept number 3? RBI prudential norms, classification of assets and provisions required. Listen, little bit interesting and conceptual concept, actually more concept topic, more conceptual topic I can say. That is exact word. Listen, first of all, for example, SBI bank is there. SBI bank has given loan to last 3 customers because I think they are mad. They have given loan to Jyoti. Who is the next person name? Sweta. Next person? Kirti. Yeah. They have given loan to these 3 people. For Jyoti 30 rupees, Sweta 20 rupees, Kirti 10 rupees. These 3 people has taken loan of this amount from SBI. Now think in SBI point of view, is it a liability or asset in banker point of view? Asset only. They will write in balance sheet of SBI on asset side like advances. That means loans given to Jyoti, Sudha, Kirti 20, 30, 10. That means in banker point of view, all these 3 people are considered as an asset, or you can call them as a advances. Both are same. Okay, na sir? Yeah. Do you know Vijay Mallya? Who is he? Correct. How do you know? Correct. Yeah. Exactly. What you are saying is correct. So Vijay Malla is the person, is like whatever you are thinking, whatever you have no. Yeah. So Vijay Malla is a person has taken loans in the form of company or business from bankers, and obviously is bankrupted, is unable to pay some amount. Listen carefully. For example, these three persons are there: Jyoti, Spurti, na? Sweta, Kirti. Three persons are there. Okay, no? Now think in banker point of view. For example, Jyoti EMI date is first of every month. Sweta EMI is also first of every month. Kirti EMI also first of every month. For example, Jyoti is paying on time every month. Second person, Sweta is not paying on time. Kirti is also not paying on time. For example, first person, Jyoti is paying on time. Every month she is paying exactly on first of every month. Okay, na? So, Jyoti will be called as performing asset. What is that word? Performing asset. Or else standard asset. What is that? Standard asset. That means no problem with Jyoti. For example, Jyoti paid on 1st of January her EMI, in Feb also, in March also, in April also. But in May, she is unable to pay her EMI. Still, banker will wait up to 90 days. 90 days is the maximum deadline. If your EMI is on 1st Jan, you have to pay at least up to 90 days within Jan 1st. That means Jan 1 plus 90 days. That is the maximum time you have to repay to the banker. If she pays within 90 days, even then she is a good person, nothing but performing asset or standard asset. Performing asset or standard asset means as outstanding amount if he pays on time or within 90 days. For example, I have given loan to you for an amount of 10 lakhs. You have to pay amount on 1st January, but you are unable to pay it. Up to 90 days, I will give you time. Up to 90 days, I will call you as a performing asset or standard asset only. If 90 days crossed, you will be called as something else. I will tell you what is that after a couple of minutes. First of all, let's focus on performing assets. Actually, all these guidelines has been given by the RBI. I think you know what is the meaning of RBI. What is RBI? Reserve Bank of India. I think you know RBI is the boss of all bankers. Everybody has to follow, every bank has to follow guidelines of RBI. It has given guidelines to some norms, means regulations to all the bankers. Especially there are two norms. One is classification of assets and provisions. Second one is income. This is our concept number 3. This is concept number 4. Here concept number 3, assets. Assets means not land and building, plant and machinery, that they are not assets here. Here assets means we have given loans to someone else. That is our assets. Here don't think land and building, plant and machinery, furniture and fixtures. Here I am discussing, or we are discussing about loans to customers. We are calling it as an asset. For banker that is asset. For customer that is loan. Here what happened? ICMAI has given loan to Jyoti, Sudha and Kirti. Now we have to call them with the different names. Listen. So main classification is performing asset or standard asset if they are paying on time or if they pay within 90 days from the due date. They are called performing asset or standard asset. Listen, they do not create any trouble. They are very good person, like just like me. Loans are what happened? Why are you laughing? Loans are advances properly paid on due dates. They'll pay on exactly on first or second, whatever it is due date. Or else, loans are advances unpaid but overdue up to 90 days. Overdue means they have not yet paid. And that means up to 90 days you will be considered as a good person only. In banking language, good means performing asset or standard asset. Overdue means due date is exceeded already. That means if you want to call one asset as a performing asset, there are two criteria. One is if they pay on time, they are performing asset. They have not paid on due date, but 90 days is not yet crossed. They are called as a performing asset only. If they cross 90 days, they will be shifted to another category. I hope you are getting my avedana. Yeah. What is my intention here? Just I want to convey what is performing or standard asset. Here asset means, my dear students, please don't think about land and building, plant and machinery, cash, all those nonsense. Here assets means loans only. Then some legendary people will ask, then write loans only. Hey man, here loans is asset to the banker. If you are preparing accounts of that customer, write it as a loan. But here we are discussing accounting for banking companies. If the bank has given to loan to some customer, that is our asset only. The best example is here only. We have given loan to all the three people. Now we have to classify them based upon their payment criteria. If they are paying on time, or if there is no trouble in their payment, or if even though they are unpaid up to 90 days, they are good only. We have to give some at least some time. That time is 90 days given by the RBI, not by me. So they are called performing assets. For example, listen very, very carefully. Please help me out. SBI has given loan to Geetanjali on 1st January 2025. Or for example, due date is 1st January 2025. Up to 90 days. Actually, she has to pay on this date. Which date? 1st Jan 2025. But there is no payment. She failed in payment. Up to 90 days. Please count it. 90 days means in Jan 30 days and Feb 28, March 31. Add it. Some more days are needed. Only one. That means 1st April 20. So up to 1st April 25, even though there is no payment from Geetanjali, she will be called as a performing asset or standard asset only. If she paid on 1st Jan, she is a performing asset. 2nd Jan, she is a performing asset. If she paid on this date also, she is performing asset only. That means maximum deadline is 90 days. Then you will called as a performing asset or you called as a standard asset. For understanding purpose, they are good persons just like me. Once that 90 days is crossed, from 91 day onwards, they will be called as a non-performing assets. In simply we call them as a NPAs. NPAs means non-performing assets. Non-performing assets means overdue for more than 90 days. Actually, if you follow the business news, so many loans which were given to the companies, they will write as a NPS. NPS means they are not set offing it, they are not write offing it. As per Banking Act, they have to give some name, that's it. Actually, during that Vijay Mallya issue, at every 3 months, this news is normally spreading. That, for example, Punjab National Bank is what you call writing some 50 crores of Vijay Mallya loan as a NPA. the people will understood like people use it to think that means they are writing off the loan. No, they are not writing off. Vijayamalla has to pay the loan. But as per Banking Act, we have to change the name from performing to non-performing. For example, SBI has given loan to Kirti. Due date is 1st Jan. Up to 1st April, she has not paid. Up to 1st April, we will call her as a performing asset. Date is exceeded. I have to change that name as a non-performing asset. That doesn't mean I'm write-offing her loan. She has to pay loan. That's it. That is her liability only. But people who is unaware of Banking Act, they use it to think that I'm write-offing that loan. That is not at all correct. I'm not telling her to please don't pay the amount. Even I need money, she has to pay money to the bank. Just I am changing the name from performing asset to non-performing asset. Because as per Banking Regulation Act, if you read or listen any news about NPAs, that means they are not write-offing loan. They are just changing the name to comply with the RBI prudential norms. Okay now? So, tell me, assets are two types. What are those? Performing asset, non-performing asset. Performing assets are also called as standard asset. What is the meaning of performing asset? If they paid on due date or out, what you call overdue up to 90 days. What is NPA? Overdue for more than 90 days. So simply we can call them as a bad fellows like you. They are not paying within 90 days or on time. Even though in bad fellows also there are some different categories are there. Small bad, middle amount and worst fellows like you. So like that, again NPA, again NPA, three categories: substandard, doubtful, loss. Substandard means just now he entered into the zone of NPA from performing asset. I will give you notes. Substandard means he shifted from performing to NPA. From that date onwards up to 12 months, he is called as a substandard asset only. Okay, na sir? For example, I have given loan to Kirti. So, she is unable to pay up to 90 days. She is called performing asset. Once 90 days crossed, she will be called as a NPA. NPA up to 12 months is categorized as substandard. If that 1 year is complete, 1 year is exceeded, then she will be called as a doubtful. That means bank has to think twice. That means banker may not receive that amount from Kirti because already overdue 90 days is crossed. She got NPA status and up NPA also 1 year completed, 1 year exceeded. Then I have to think twice. There is some doubt is there. Last category, loss asset. Loss asset means either bank or auditor or RBI, they decided I will not receive this amount from that Kirti. Then that is called as a loss asset. This classification is given by the RBI, not by me. So actually RBI gives two kind of norms. Norms means rules. What are those two rules? One is for classification of assets and provision. Second one is recognition of. So what is the first concept? Classification of assets, and we'll discuss provisions later. Let's first focus on classification of assets. Normally we know assets are two types: tangible assets, intangible assets, or current assets, non-current assets. Here assets means not like land and building, plant and machinery. Here assets means loans given by the banker to the customers. So why you are not calling it as a loan instead of asset? Because for banker that is asset, for customer that is liability. Correct, no? So out of these assets we have bifurcated into two categories: performing asset, non-performing asset. Performing assets are also called as standard asset. Again NPAs are divided into three categories: substandard asset, doubtful asset, loss asset. When to call it as a performing asset? Overdue up to 90 days. When to call this NPA? Overdue more than 90 days. Again NPA, three categories: substandard, doubtful, loss. When you call this substandard asset, he is NPA up to 12 months, he is called substandard. When to call doubtful? NPA more than 12 months, he is called doubtful asset. When to call it as a loss asset? Either RBI or auditor or bank identified as a loss, then it will be called as a loss assets. For example, in our example, we have given loan to Jyoti, Kirti, Sudha. Jyoti overdue is up to 90 days. She is called as performing asset. Kirti overdue is 270 days or else 160 days. Tell me. NPA obviously. In NPA which category? Why substandard? 1 year is not yet completed. So she will be called as a NPA. And Sudha 366 days. She will be called as doubtful asset. And one more thing, this is very, very dangerous. People will definitely do mistake here. Listen very carefully. This is due date. Up to 90 days. 90 days means I can say 3 months, no? On an average. 3 months. From here 12 months. They will be called as a substandard asset. More than this, they will be called as a, listen very, very carefully. From due date 12 months means, they will be only, for example, listen very carefully, this 12 months from this date, not from this date. Are you getting my point? When you call one asset as a substandard asset, you have to consider from the date of NPA, not from the due date. They will ask one question in our material. They will tell you due date of 15 months from due date. Tell me what will happen 15 months from due date. Substandard or doubtful? This is 3 months, no? This is 12 months. Within this only. This is substandard only. 15 months means not doubtful. From NPA 15 months, that is doubtful. Are you getting my point, sir? So from due date to 90 days or 3 months, performing assets, sir. Here they will get NPA status. From here up to 12 months, substandard. There will be doubtful assets. Or else I will try to write the notes. Just hold on. Yeah, listen. This is due date. 90 days or I can say 3 months. Up to this they will called as a performing assets. From here we have to count 12 months, not from here. From here we have to consider 12 months. They will be called as a substandard asset. If more than 12 months, they will be called as a doubtful asset. People will ask 15 months from due date. What will happen? From here 15 months means 3 months, 12 months, here only, within this date only, substandard asset. You have to check whether it is from NPA status or from due date. If you want to call one asset as a substandard asset, if it is from NPA, 12 months, from due date 15 months. Are you getting my point, sir? Generally what provision says, from NPA onwards 12 months only. But they will twist the question like from due date 15 months. What people will do, 15 months means more than 12, they will write doubtful asset. That is not correct. If they are asking from due date, 15 months is substandard asset only. If they are asking from NPA, 15 months means doubtful asset. It will cross the line. Are you getting my point? So now tell me, so total assets are divided into two types as per RBI norms. What are those two types? Performing asset, non-performing asset. Performing assets are also called as standard asset. NPS. NPS are again three categories. What are those three categories? Substandard asset, doubtful asset, loss asset. So performing assets means so overdue up to 90 days. Next one, NPA means overdue more than 90. Again that NPA, three categories: substandard, doubtful, loss. So if you want to call one asset as performing or non-performing, that is easy. But the difficulty thing is you have to find out whether that is a substandard, doubtful, loss. When to call it is a substandard asset from NPA to 12 months. If you are thinking from due date, that will be 15 months because 90 days are already there. Correct? No? When to call it is a doubtful asset from NPA more than 12 months. That will be doubtful. When to call it as a loss asset, if it is identified as loss either by the RBI or by the banker or by the auditor, that will be called as a loss asset. Clear, sir? So copy concept number. Before that, don't write concept number. Write this chart, then concept number. So first copy this chart. RBI prudential norms, first category. Category kadu, that is first norms, classification of assets and provisions required. Second norm, recognition of income. Right up to this, only this chart. This will be our concept number 3. This is concept number 4. Chittidalli, what happened? Write this chart only. Then give a heading concept number 3. Now give a heading concept number 3. After writing this chart, give a heading concept number 3. RBI prudential norms hyphen classification of assets and provisions required. Sweta, are you writing? Yeah. Kaushik. Where is Kaushik? Completed. Then copy. Assets, 2 branches, performing asset, non-performing asset. Other name for performing asset is standard assets. If not completed, you have another option. Open YouTube. Again on NPA, 3 categories: substandard, doubtful, loss. Under non-performing asset, within the bracket, write down NPA. NPA stands for non-performing asset. Everybody should aware of what is the meaning of performing, what is the NPA, what is substandard, what is doubtful, what is loss, when to call all those things. Please try to understand. If you are unable to understand, please feel free to ask me at least after the class. Can I scroll up? Okay now. Can I? Performing assets. They do not create any trouble. Loans or advances properly paid on due dates. Loans or advances unpaid but overdue up to 90 days. They will be called as a performing assets. Last bench, is it visible properly? Or else you can come forward. Yeah. NPA means overdue for more than 90 days. On that we have to again bifurcate or classify into three categories: substandard, doubtful, loss. There is no thought about loss. That is very easy. There is no dates, all those things. When to call it as a loss asset? Identified as loss by the either RBI or a banker or auditor. The problem is only with substandard, doubtful. When to call substandard? From NPA to 12 months, not from due date to 12 months. If from due date, 15 months. When to call it a doubtful asset? After substandard, I can say. That's it, no? Yeah. Teju, completed. Why so? No, I don't know. Completed. Write down substandard, doubtful as well. Being NPA for more than 12 months is called doubtful. NPA up to 12 months is called substandard. Last one, loss assets. Identified as loss either by bank or else auditor or else Reserve Bank of India. So my agenda is very clear. If the question comes from banking company, you should get 7 out of 7. If MCQ, 2 by 2. If they ask both MCQ and question, you have to feel lucky. He has to feel sad. Who is that person? Examiner. Done now? Yeah. Remaining we'll discuss